Welcome to the Multifamily Investor Podcast. I'm Andy Hagans. On this show, we'll be talking about how high net worth investors like you can build generational wealth with passive investments in multifamily real estate. And I know I already said this in episode 1, but to reiterate it here, I'm so excited because I'm the co-founder at WealthChannel. We run podcasts and events for high net worth investors. And this is a first for us. We've never had a podcast devoted exclusively to multifamily. We've never had a partner here covering this space exclusively on a show. And I'm so excited to dive in, right? Because on my day job, I'm the host of the Alternative Investment Podcast, where we cover all types of alternative investments. But within alternative investments, the 800-pound gorilla is real estate. Within real estate, the 900-pound gorilla is multifamily. Multifamily is so popular among high net worth investors, among ultra high net worth investors and family offices. And, so I want to dig in and talk about this sector. But as a reminder, I already said this in episode 1, there are probably 100 or more really good podcasts already being published on multifamily. So what makes this show different? Why am I adding, why am I tossing my hat into the ring? Why am I adding my voice? Well, a lot of the folks running some of the very good existing shows are syndicators or asset managers. They are industry professionals. They are involved in the industry, from that the management perspective, right? Or they're syndicating or they're operating. I want to cover this space from the perspective of a limited partner, from the perspective of a passive investor, right? Because I'm an HNWI. I invest in all kinds of private alternative investments, from venture capital to, private real estate, and especially including multifamily. And I want to talk about what attracts me to this space. What do other HNWIs, accredited investors who are investing in private offerings, what do we need to know? What do we need to be talking about when we're talking with sponsors, when we're talking with managers? What are the questions we need to ask? But for this second episode, I want to zoom out a little bit and just set the table. I have a lot more content teed up for our next few episodes, but I want to set the table and talk about why multifamily, right? It's a very valid question. There are so many alternative investments available to you if you're a high net worth investor or family office. And why is the multifamily space one of the most perennially popular sectors within all of alternatives, let alone all of private real estate? And to me, there are 3 main reasons that multifamily is so popular as an asset class. And I want to talk about them here today in this episode. And let's start with the first reason. Let's just dive right in. To me, as an LP in a multifamily fund, why am I investing? It all starts with an investment thesis, right? Because we can talk about some other aspects of an investment, but if we don't think it's going to make money, then it's intrinsically, it's not attractive. We invest in multifamily because we think there's a very sound investment thesis behind it. And over on my other show, the Alternative Investment Podcast, when we talked about multifamily, I've probably had 50 or so different guests who are managing or operating multifamily funds. And one theme that comes up over and over is the supply and demand mismatch. Because when we're talking about prices, when we're talking about the free market, when we're talking about investments, supply and demand are very important, right? So I have some articles. I'll put these in the show notes. I'm going to bring them up on my own desktop here because I want to make sure I get this right. But I'm sure you've heard the National Association of Realtors. They quote this all the time, that there is a housing shortage nationally. I think I've heard 5 million. This article that I've brought up is from realtor.com, June 16th, 2021. The title is "Once in a Generation Response Needed to Address Housing Supply Crisis." And this article quotes that growth in America's housing inventory has slowed significantly since the turn of the century, particularly over the past decade. This trend affects every region of the country, creating what the NAR report calls an underbuilding gap of 5.5 to 6.8 million housing units since 2001. Again, it's important to note this article, that stat that they cite, it's talking about all housing units, right? So we can talk about single family homes versus multifamily, how those two things interact. But to me, the headline is there's a general housing shortage. And even when we're looking at single family homes, I know that that home affordability index right now, it's at like a multi-generational low. It's housing is very unaffordable. If you want to go out and buy a home right now, that certainly affects demand for multifamily. And I think, again, this stat is for total housing units, and I'm going to dig into another article here in a second. But I think it's important to note that when you have a housing shortage, whether it's single family or multifamily, everybody needs a roof over their head, whether it's multifamily or single family. And that housing shortage dynamic, it's going to affect every type of housing, right? Where there's a housing shortage, whether you're talking about renters or buyers, it's going to affect that supply and demand is going to affect everyone. Okay, turning now to another article, which again, I'll link to in the show notes. This is from Yahoo Finance. It is referring to a report from the National Multifamily Housing Council. This article was published on May 23rd of this year. If you believe the U.S. has a housing shortage now, you won't like 2025. That's the title of this article. According to a report from the National Multifamily Housing Council, the U.S. will be 4.3 million apartments short of meeting the demand for housing by 2035. And if you believe that prediction to be particularly ominous, a glimpse of what's ahead 10 years earlier than that will make you think twice about selling or moving from any association with multifamily housing. So the article goes on to quote John Hutchinson, co-CEO of private real estate investment firm Tres Capital. He says, I think it's very likely there will be a shortage of apartments and houses in 2025 because the cycle got interrupted in 2022 and 2023. Right. So we were talking about this overall shortage of housing. Now, this article is specifically talking about multifamily housing. And I think it's important to note, as we saw tremendous rent growth in multifamily in the past few years, especially in some areas of the country, like Florida, made the national news because the rents there spike so much. Of course, when anything is in the news like that, it's going to tend to attract more investor interest, and returns are high. That in and of itself will attract more interest from institutional investors, from retail investors. So there was like a little bit of a mini boom in multifamily housing in new developments in the past few years. Some of that inventory is coming online now or will be coming online in the next year or two. But the point I want to drive home is that, to me, that new inventory, it's kind of part of the micro picture, right? And in certain markets and certain MSAs, that's going to create, a glut of supply temporarily. But in the long run, over a decade, over 2 decades, it's a little bit like bringing a squirt gun to a gunfight, in the sense that that little mini boom that we've had in the past couple of years with multifamily and with ground up construction, it did not in any way, shape, or form close that housing gap, right? We still have this huge housing gap, shortage of housing in the United States, and especially affordable housing, workforce housing, middle-class housing. There's a shortage. There is more demand than there is supply, right? So as an investor, back to our thesis, why multifamily? Everyone needs a roof over their head. And when we look at supply and demand, and especially those places in the country where people want to live, where they're moving to, the Southern United States, the Mountain West, a lot of very desirable cities, there's a housing shortage, and there's a multifamily housing shortage. And so that favorable supply demand mismatch, that's the underlying fundamentals that support multifamily, whether you're talking about ground up construction, or talking about existing assets. There's going to be continuing demand for multifamily assets from renters, and therefore also from investors, because that's going to put upward pressure on rents. It's going to allow those assets to achieve strong returns over the next several decades. So that's reason number one. I'm bullish on multifamily. the big thesis, the supply demand fundamentals that make it a good time to invest in multifamily. And I have to say, I think you can also feel good as an investor. When you're investing in ground up construction, you are in a very real way. You might be investing to make money, but you are in a very real way helping to address the nation's housing shortage, right? By bringing new housing units online. Second big reason to invest in multifamily, the second big benefit that, and I know talking with family offices, this is a big one for them, right? Because when you talk to ultra high net worth investors, when you talk to family offices, the number one goal amongst family offices, so we're talking families with net worths of 100 million, 250 million or more, is capital preservation, right? So they're looking for portfolio diversifiers. And now I'm going to bring up, I'll put this link in the show notes. I want to back this up with some data, but I think it's generally well known that multifamily real estate is a solid investment. It's secure, it's easy to understand, and it's resilient in times of economic recession or contraction. It's a very resilient asset class, right? And so it usually doesn't return 20, 25% in a year or have any, crazy returns like that. But at the same time, it's the little engine that could, right? It's very consistently performing asset class. So I'm bringing up this link. This is actually hosted on manhattanstreetcapital.com, but it's a report from CBRE, U.S. Multifamily Research Brief. And they are analyzing the past two recessions, how multifamily performed in the past two recessions, the previous two recessions. Key takeaways from the report: U.S. multifamily property rents declined less than those of office and industrial properties during the 2001 economic recession, and their growth rate was considerably higher post-recession. Then during the 2008-2009 recession, multifamily rents were more resilient than those of office, industrial, and retail. And by the way, just to pause there, this isn't even talking about what happened with office in 2021, 2022 with the COVID lockdowns and all these changes with work from home. Even previous to that kind of structural change we saw with office, multifamily was a very resilient performing asset class in commercial real estate during these previous two recessions. Last key takeaway cited by this report: multifamily rents have outperformed those of the other major property sectors during and after the 2008-2009 recession in three ways. The sector experienced the lowest level of rent decline, the fastest recovery to pre-recession peaks, and the longest post-recession period of rent growth. Okay. So the report goes on to say, while each recession has unique impacts on how businesses and people use commercial real estate, there are common characteristics. So multifamily outperformed office and industrial in that 2001 recession, and all major property sectors, including office, industrial, and retail during the 2008 and 2009 recession. So I think that's important because now those are two different recessions. And then you can kind of throw in, although it's not in this report, what happened in 2021, 2022 with office. Multifamily performed very well over that time period because, if you think about it just logically, and this is something, this is not on my list of 3 benefits, but I'd say this is another benefit of multifamily. It's easy to understand, right? That's why family offices like it. They understand it. Everybody needs a roof over their head, right? So no matter what's going on in the world, .com crash, the Great Recession, or COVID, people still need a roof over their head. That means that this asset class is very resilient, even during periods of economic turmoil. Okay, so that first appeal of multifamily, the underlying investment thesis, why we believe that it could have very strong returns in the future, the supply and demand imbalance. The second reason It is proven to be a relatively resilient asset class during periods of economic recession. So a lot of family offices, a lot of high net worth investors are looking to multifamily for that portfolio diversification benefit. Okay. Third reason, last but not least, I have to say this is last but not least. The third reason multifamily real estate is a very, very popular asset class for high net worths and family offices in particular. Massive tax benefits, all kinds of tax benefits. I'm going to talk about just a few of them here. And full disclaimer, I'm not an investment professional. This is not investment advice. This is also not tax advice, and I'm not a tax professional. But I think a lot of investors are familiar with, passive, even passive real estate investments have these tax advantages. You have depreciation, right? When you invest in a private equity real estate fund, that depreciation passes through to you. You get it on your K1. You can use it to offset other types of passive income. A lot of private equity real estate funds will have that cash out refi planned for, year 2, 3, 4, or 5. And a lot of times that's going to be all return of capital, not return on capital. So that's a tax-free distribution. That's a very advantageous. But we also have other tax strategies as well. We can't forget the 1031 exchange. And a lot of investors are, utilizing the 1031 exchange to invest in Delaware statutory trusts, DSTs. We're covering DSTs a lot more on WealthChannel here lately. We even have an investor guide about DSTs. But the 1031, just in and of itself, aside from these other tax advantages, that's a huge, very popular vehicle to defer capital gains from real estate. And in the multifamily world, a lot of people are using the 1031 over and over, swap till you drop. I'm also an LP in a qualified opportunity fund in the multifamily space, right? So opportunity zones or qualified opportunity funds, they're a little bit different than 1031 exchange DSTs. But that's another example of a tax program where you can invest in multifamily in a very tax advantaged way. I'm not going to go into all of the details on qualified opportunity funds and opportunity zones. We have another whole podcast about that. My business partner, Jimmy, his podcast covers opportunity zone investments. And I know he has a lot of episodes specifically about multifamily. But to kind of summarize that program, if you have a capital gain from a type of investment other than real estate, to where you can't necessarily do a 1031 exchange, but if you have a capital gain from the sale of a private business or from the sale of stocks, bonds, mutual funds, something like that, you can invest in multifamily with that capital gain through a qualified opportunity fund and defer that capital gain. So that's a great way to invest in multifamily in a tax advantaged manner. But really, even aside from opportunity zone funds, even aside from 1031s, that the depreciation benefits, the ability to do the cash out refi, it's almost like every vehicle investing in multifamily real estate is tax advantaged. It's only a question of how tax advantaged, right? And sometimes different sponsors, or depending on the vehicle or wrapper, they will be layering on multiple tax advantages. And I think it's important to note, because this show is geared towards, our target audience is that high net worth accredited investor or family office, these tax advantages have more relative value to high net worths and ultra high net worths who are in that higher tax bracket, right? Because when you're a high net worth investor or family office, you really need to be thinking about all of your investments through that triple net returns framework, thinking about investments and their returns net of inflation, net of fees, net of taxes, right? In mainstream financial advice, we always hear about IRAs and 401ks, which I love those vehicles, don't get me wrong. But, if you're a high net worth or ultra high net worth, you're going to run out of tax advantaged accounts space, right? And so you're going to have to look for other types of investments that are also tax advantaged. And that really is the third big benefit of multifamily, right? Is it comes with all of these, tax advantages, depending on the wrapper you're investing in, that can be very, very desirable for high net worth or family office. I think that wraps it up. I think I've covered what attracted me to the multifamily real estate space, why I've invested some of my own hard-earned money passively as a limited partner into private offerings into multifamily real estate. So in the next few episodes, I'm going to be doing sort of it's almost like a greatest hits. I'll be republishing some highlights with some of the interviews I've done with all stars, some of the best and brightest from the multifamily real estate industry. And then, so we're going to be sharing some of those insights that I've already gotten on camera with these experts in the past. And then I've already lined up and will be continuing to line up more and more experts, industry thought leaders from the multifamily world for brand new content in our future episodes. So if that sounds good to you, if you want to learn more about investing passively in multifamily real estate to grow your wealth, make sure to hit that subscribe button. This show is free and available on YouTube, on Spotify, on Apple Podcasts, and really whatever your favorite podcast listening platform is, we will be available there. So make sure to hit that subscribe button, and I will see you again soon for another episode.